Hey there, lifestyle fans. If you're like us and can't wait to get behind the wheel of a brand new vehicle, you might be in for a bit of a shock. Have you seen the prices of cars these days? They're so high that I'm pretty sure we could buy a small island for the same price. But seriously, what gives? Are the car companies like Ford, Toyota and GM trying to make up for lost time during the pandemic, or do they just really like record profits? Join us as we take a ride through the data and try to figure out what's really going on with these car companies. Who knows? We might even find out that they're all just playing a big game of Monopoly with our hard-earned cash, or is something more sinister in the driving seat? So, hop in and let's find out if these car giants are putting profits before our pockets and sanity. Sky-high payments. Over the past decade, the average new car payment in the US was about $400 a month. However, in November 2019, it surpassed that mark and has been steadily increasing ever since. The average price for a new vehicle in the US has risen to nearly $50,000, which is a 30% increase since 2019. Automakers are benefiting from selling fewer but more expensive cars. In 2022, Ford's gross profit rose 4.4% from the previous year, and GM's earnings increased by about $200 million to reach $14.5 billion. In Europe, new car prices have hit all-time highs and continue to rise, while Japan saw an increase in used car prices due to vehicle shortages. In China, an economic slump has kept car prices relatively stable, but major cities are making it harder to register for internal combustion vehicles and forcing people to shift toward more expensive EVs. It is important to note that the most popular new vehicle sold in the United States in 2022 is the Ford F-150, with an average transaction price of over $66,000. The average cost of a new car in the US is $777 per month. Many major automakers have decided to increase prices on their cars while focusing on producing more expensive, higher profit margin vehicles. Shockingly, in January 2023, almost 20% of all cars sold in the USA were luxury cars, which are usually only affordable for the wealthy. To put it into perspective, one car out of every 5 cars sold in January 2023 was a luxury car. This doesn't mean that people have suddenly become rich. It could mean that people are being pushed into buying a luxury car. Before we talk about the other reasons why car prices are rising, make sure to hit that like button if you are enjoying this video, and while you're at it, don't forget to subscribe to our channel. Keeping stocks low. As you know, when there is a shortage of something, the prices go up. Back in the day, car manufacturers used to keep large amounts of inventory and relied on deep discounts to sell their products. Large amounts of inventory meant that the companies always had the resources to deliver the demand. However, now they are trying to keep their inventory levels lower to save on costs and keep prices high. According to GM CEO Mary Barra, the company won't return to the previous inventory levels. Other companies such as Ford, Toyota, and Nissan are also following this strategy. Ford CEO Jim Farley said that they do not want to pay billions of dollars in inventory or offer discounts to sell their cars. So, keeping low stocks might be profitable for car makers, but it is exactly the opposite for car buyers. However, there are some indications that the current supply chain issues may improve slightly, which could result in lower prices for new cars. Tesla and Ford have already reduced prices on electric vehicles, but as we already know, electric vehicles cost about 35% more than gasoline-fueled cars, which is making the affordability crisis even worse. Even after a discount on electric vehicles, they still cost a lot. Microchip shortage. Some dealers are claiming that the chip shortage is no longer a significant problem. It is the car wars that are skyrocketing the prices. The executive vice president of sales for Toyota Motor North America stated that the industry may have enough chips to sell 15 million vehicles in the US in 2023. However, this number is still about 12% below where sales were 3 years ago. The chip shortage has created more than 4 million vehicles worth of pent-up demand, which will prevent prices from going down quickly. Options are very limited for those in search of affordable new cars. Domestic automakers have stopped building compact cars in the US as they were not profitable. As a result, more new cars are being purchased by wealthy consumers. Nearly 30% of the automotive market now consists of households with an annual income of more than $150,000, which is 8% more than in 2016. Automakers are focusing on producing more expensive vehicles such as EVs and top trim levels, which has led to the elimination of entry-level trim options by companies like Toyota and Honda. Used vehicle prices going up. Now, when you need a car but you can't afford a new one, what do? You try to find a used car. Unfortunately, if you're looking to buy a used car in spring 2023, you might have a tough time finding a good deal. Wholesome used car prices have been going up for the past 3 months, with a 4.3% increase in February alone. While these prices are still lower than they were a year ago, they're again going towards record highs. This is bad news for consumers who are hoping for lower prices. The average listed price of a used car in January was $26,510, which is lower than the record highs of over $28,000 we saw in 2022. However, retail prices for consumers usually follow wholesome prices, so if wholesome prices keep going up, retail prices are likely to follow. In fact, according to automotive analysts, retail sales of used vehicles fell 9% from a year ago and by 5% from January to February in 2023. The pandemic and supply chain issues have caused the production of new vehicles to slow down, which has led to a low supply of new vehicles and record high prices. As a result, consumers have been buying more used cars, which has driven up their prices too. This trend is likely to continue as interest rates are expected to rise, making vehicles less affordable for consumers. If things continue like this, buying new cars will quickly become something only the wealthy can afford, similar to owning a house or getting a college education. Now it is clear that while these automotive giants are making profits with the help of their expensive vehicles, any automaker could also use this as an opportunity. While everyone in the market is increasing the prices of their cars, if one automaker launches an affordable car, it could change the whole equation. This is not just hypothetical, Toyota has already done this in the past. Back in the 1950s and 1960s, the Japanese government realized that their domestic automakers were too small to compete with their American rivals. But rather than throwing in the towel, the Japanese automakers, led by Toyota, decided to focus on making small, economical cars that were affordable for a large portion of the population. Toyota's first attempt at breaking into the American market with the Toyota Crown wasn't successful, but they quickly realized that they needed to adapt to American taste if they wanted to succeed. So, in 1965, they introduced the Corolla, a car that matched American consumers' preferences, and it worked. Sales began to grow rapidly, and Toyota's reputation for quality and reliability grew along with it. And with the gas crisis of the late 1970s, Toyota's popularity exploded as people sought out more affordable and fuel-efficient options. So what does this all mean for today's automakers? Well, if history has taught us anything, it's that there's a huge market for affordable cars that don't compromise on quality. And with more American households in the middle class than the elite class, it's only reasonable to think that a vehicle that costs around $25,000 to $35,000 range could do well. If an automaker can take advantage of this situation and roll out cheaper vehicles that more people can afford, they could steal the majority of market shares from the current legacy automakers. The possibilities are endless, and it seems like Tesla has already picked up on this and is planning to launch its $19,000 Model 2. Do you think that giant automakers like Ford and Toyota will continue the trend of keeping low stocks and producing expensive vehicles, or external forces like Tesla will force them to release cheap vehicles in the future? Let me know what you think in the comments section. Please like the video if you enjoyed this video, and don't forget to subscribe to the Lifestyle channel so that you don't miss any important updates in the automotive and tech industry.